Hello everyone, this is General Romulus coming to you live from the Forum in ancient Rome. Earnings keep rolling out, tech stocks keep rolling lower, and before we take a nice old Roman look at the details, let's always remember that General Romulus is not a broker, advisor, professional financial service provider of any kind. Any actions you take are all on you. And before the market even gets open this morning, things are red across the board. Tesla came out with earnings last night. The stock is down almost 10% before the market opens. Google reported earnings last night. Stock is also down, not quite 10%. Stock is also down. And right above that vaunted, closely watched, and highly important 200-day moving average. Google has not traded below its 200-day moving average. You could see really since 13 months, quite a while. And speaking of moving averages, not below the 200, however, the NASDAQ, which let's face it, all the retail traders out there, this is where you are, is getting more and more comfortable trading below its 50-day moving average, which is that bright yellow line right here. See, this is back in the war days, and now we're back on the war days. But this is Iran war early stages. In that March period, it traded below it and then sprinted. Really, what a move. This was like dot-com era kind of a move. And now, again, it's getting a little more comfortable below the 50-day moving average. Between now and the middle of October, so a little less than 3 months, we will most likely see price meeting the 200-day moving average somewhere along the lines. So be prepared for that. I know what you're saying. Tesla and Google, great. They're the companies that are spending money on the AI move. They're not the ones that are benefiting yet. That comes later. Right now, it's all the chip stocks, right? The bottlenecks and the supply chain issues, blah, blah. Look, let me tell you something right now. That's not news. Everybody knows it. Everybody. My mother knows it. And she's an ancient Roman like me. And when everybody knows the same thing, you ain't going to make real good money there. You're taking more risk than what the money is worth. Take a look at the semiconductor index right here. Okay. We highlighted this back, when it was breaking down. We told you, that's right, we told you when this was up here at 610 that it was most likely going to see the mid 550s. Bam, boom. What is that gladiator talking about? $537 a share. Holy Centurion Romulus. Thank you very much. Great. What did you do for me lately? Okay. It's true. Google increased their spend commitment, another 10, 20, 30, 40 billion at this point, 20 billion here, 20 billion there. What's the difference? I mean, we're still not talking about real money yet, right? No, not when one man on the planet is worth $700 billion. He could spend this stuff out of his own pocket anyway, and he practically is. However, Google increasing their spend, which, yes, true, it is going to benefit primarily this company right here. However, other chip companies also. NVIDIA, no doubt about it. And the other chip companies, the bottlenecks, and everything else that you are fully aware of. However, do not, I repeat, do not expect stocks like Micron, SanDisk, and Western Digital, and these other companies that are in there, the bottlenecks and the pick and shovel providers. My goodness, aren't you getting tired of that one? That was good 30 years ago, but today, you're not going to see 2, 3, 4, 5, 600% returns on these stocks ever again. Like ever, never, 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 never again. You will never see that from this point forward. Ever, never, never, never again. And I know you don't believe me, but take my old Roman word for it. You're never going to see a 700% return or a 400% return on SanDisk or Micron ever again. If you doubt me, Tesla went up 700% in the year 2020. And at the end of the year 2020, I said you'll never see that again. And you will never see that move again from a company like Tesla. You got to move on. You got to be in the places that no one is talking about. And we could talk about that some other time. Okay, aside from not making 700% a year on these chip stocks, you can still make money. You can still trade them. You have to be a little bit nimble because don't forget, we are coming into the most bearish period of the year for the U.S. equities markets. September is the most bearish month, followed by, what's the next weakest month? August, not October. Everyone believes it's one of those Wall Street myths that October is the worst month. or one of the worst. It is not. October is actually pretty good because stocks go down in the first couple of weeks and they come back up. By the end of the month, especially with an election happening this year, there will be a lot of incentive from the parties in power, the party in power rather. There's one party in power to try to keep these markets afloat. However, we still have September coming, and regardless of what is happening out there politically, they face a lot of headwinds, and we will most likely see lower stock market prices between now and the middle of October, regardless of what happens between now and then. And there will be a lot happening between now and then. We have a Fed meeting, and I do want to talk about that. There's a couple things that General Romulus has been consistently saying for the last several months. Number one, since these chip stocks topped, no more massive, awesome, easy money returns in there. Okay. Number two, this is something that we have been consistently talking about before anyone else could even breathe the idea that interest rates matter. Most portfolio managers and small hedge fund guys and the retail crowd and the traders out there want to ignore this and pretend that it doesn't matter. It matters. It doesn't matter until it does. And now it does. The 10-year sitting up here at what? How high? Well, it's actually not far off from where it was a couple of years ago. Cracked just over 5%. Let's look at the 30-year though. And the 10-year is the one that truly matters, I understand. However, it makes sense to look at the whole basket. And the 30-year right now, trading at, well, multi-decade high. Let's see, the last time it was at 5.21%. You want to go back, we're in the chariot, we're taking the old Roman trip back, and you got to go back all the way 19 years. 19 years was the last time the yield on the 30-year was this high. And again, General Romulus has talked with you about this many, many times. I know it's a boring topic. I know you're falling asleep, right? Give me SanDisk. I want to go up 1,000%. Sure, I get it. But this matters. Again, it doesn't matter until it does, and now it does. Take a look at the 3-month, the T-bill. Look at this. Look at this closely. You see how it bottomed out in here. Now it's turning. This was your signal a while ago before Kalshi and all the other prediction markets and all the professionals and experts out there started to change their predictions from 2 rate cuts in 2026 to 2 hikes in 2026. And I don't know if I agree with 2 hikes. I'm not sure I agree with 1 hike quite yet. However, one thing I became convinced of for sure back in the wintertime was that, nope, we're not going to see any cuts. And now everyone's talking about hikes. This was your signal right here. And again, we've talked about this many, many times. Okay, it doesn't matter until it does, and now it does, but why does it matter? What is the difference if interest rates are going higher? Well, you want to buy a house, you're going to pay more in a mortgage. You want to buy a car, you'll pay more for the loan. You want to buy a technology stock with all those forward earnings that you're promised from, it doesn't matter whether it's the Microns, the pick and shovel providers, or the Googles and the Metas, the hyperscaler build-out companies. They're talking about the future. I mean, no one proves this more than Tesla, of course, and Elon Musk himself, but they're talking about the future. You have to get that cash flow in the future. You're not looking for it today. You're banking on something that's going to come in big down the road. When interest rates go higher, that puts more pressure, number one, on the competitive nature of investing dollars, and number two, the nature of the idea that we have tech stocks, we have interest rates. Well, higher rates create headwinds for those types of higher risk stocks. Get it? Now, I fully understand that part of the blame, or the reason, however you want to look at it, for these higher interest rates right now is the oil market. So we're on a weekly, we'll move it back to a daily just to get a little more of a fine-tooth look at it. And we also know that the oil prices have been moving up because of renewed attacks between the United States and Iran and the United States, and back and forth. And now Iranian proxies are attacking oil-containing ships that are moving through the Red Sea. The Hormuz Strait is still having problems. Oil's not flowing through at the speed that it was just a couple of weeks ago. So that's one of the reasons. Oil prices, really, if they go back in the hundreds, that is inflationary. Inflation creates an environment where interest rates need to go higher. And there are probably other reasons that are not inflation attached to why interest rates are going higher. That's kind of a longer term conversation. That's more almost a political, philosophical conversation, economic theory conversation. But real simply, part of it is because supply and demand. The United States just has far, far too much debt. There's just way too many of these bonds floating out there. In other words, a lot of supply. When there's a lot of supply that answers the demand, what do you have to do to create more demand? You got to lower your price. And the way you lower your price in the bond market is for yields to go higher, which is what you're seeing, which is exactly what you're seeing. Now, I mentioned a bit ago, there's still trading opportunities. Of course, there are. We have a lot of big technology companies still coming out with earnings. Microsoft is next week. Meta is next week. Amazon is next week. Apple's probably in about 2 weeks. They're a little bit behind. And then NVIDIA is an August reporter. They're not on the same reporting schedule as a lot of the other type of companies. A lot of the other chip stocks as well are reporting kind of an off-schedule basis. So and we have a Fed meeting next week, actually Wednesday afternoon at 2 p.m. Eastern. The Federal Reserve will announce, and they will announce, in my opinion, no change to interest rates. They will probably announce no change to interest rates. If a hike does come, it'll be more likely to happen in September. I believe the new Fed chairman would like to keep his job, and I can just picture if he raised interest rates next week, I don't know what would happen to Trump, but his blonde head would probably just explode, and he would take Warsh with him. So probably no interest rate hike, although a lot of bettors on the Kalshi and those other sites are looking for that right now. Probably no hike coming quite that soon. However, it wouldn't shock me though if they did if they did that. Again, we see oil prices higher, and we do see interest rates moving up across the board. I would look to be a buyer if we get enough of a dip of an NVIDIA, for example, before the earnings next month. It'd have to come below the 200-day, kind of let a lot of the newbie and loose retail traders, the unsophisticated retail traders, get shaken out, and look for something like that. And some of these other stocks that are still benefiting from the spend, if they pull back, you can get trades out of them. And I'd be looking for that. But remember to remain nimble, because again, we're coming into the most bearish season of the year. Oh, it's been great to be with you as always. You want to reach me directly, RomulusTeaches@yahoo.com. Again, RomulusTeaches@yahoo.com. And I am back to the forum. We have our own political scenario going on, even though it is still summertime. The senators are coming back from their villas in Capri and far and wide. And as always, whether it's in the Coliseum with the gladiators or the political forum, it promises to be an old Roman battle. And I don't want to miss a bit of it. I wish all of you a great trading day.